Hey, it's Monday, April 15th, 2019. Let's trade some Forex. So ni hao mao. How you guys doing? Happy day. The sunrise is rising over the lake this morning. Glad to share this moment with you. Oh, bud, I wish you can see this. It's so beautiful. Anyways, I made $500 billion trading gold in Hong Kong last night. I want you to play with it. Show me what you got. This is your wake-up call, bud. Yeah, no, it's beautiful. It's beautiful. Anyways, good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Do you have a boat? No, we're more of a kayak family. Which lake? It's my lake. That's the lake. Lake me. So anyways, yeah, cool. Right on. Well, another trading week. Another week of pivots. Right on. Halfway through the month. We must have CPI coming up, huh? WTI kind of waking up. Have I met with George Soros? We'll put it this way. I've worked on a board with George Soros, but I was never invited over to his house for a barbecue. So yeah, so I'm hoping things are waking up and topping out and all that kind of stuff. So we'll see how it goes. We'll use some technical analysis. So anyways, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here today at the Forex.Today YouTube channel. Traders Way is the sponsor, and we're hoping that these events are helping you become a successful, confident, conservative, disciplined trader. And when you're ready to trade real money, you'll choose Traders Way as your broker. Maybe because of the competitive spreads, maybe the fast execution speed, maybe because of the world-class customer service, or maybe simply because of these webinars. Paul says, do I trade Bitcoin at all? Well, I've owned about 6 Bitcoin in the last 6 weeks. Does that count? I don't think that counts as trading. It's only 6 Bitcoins, but whatever. That's interesting. I think like Bitcoin is interesting and cryptocurrencies are interesting, but being like an old school sort of venture capitalist, I'm much more interested in blockchain in general than trading Bitcoin. But Bitcoin's cool. But blockchain is really fascinating, right? So while some people might be interested in trading, 0.0001 Bitcoin for the next, for the next day, I think it'd be interesting just getting in blockchain for the next 50 years. But that's my thought. Well, Mike says, can you walk us through negative interest rates? Well, the only thing I can really say is that they're doing whatever they can to get you to not buy the bond. So it's another way of sort of trying to weaken a currency. Joe has a fraction of a Bitcoin. Yeah. Yeah, so I was actually like, full Bitcoins and stuff, but not necessarily trading, but more transaction based. And I think it's really, really interesting. Yeah, I mean, compared to, when I like to look at things from an investment point of view, I like to look at things that are either create an entire new industry or replace an entire product, right? And blockchain is significantly better than what we've been doing the last 50 years. So it's very, so I can see it being something. All right, so you have charts, that's cool. More questions here. How do my trading robots trade? How do my trading, what? Oh, Katrina wants to go away. All right, goodbye, scumbag. I hate to call someone named Katrina a scumbag, but anyways, goodbye, scumbag. Okay. Her robots were going to make you filthy, stinking rich. All right, cool. All right, so let's go into here. Take a look. Not a lot has happened. Give it a couple of clicks in here, right? You can see what we have planned out, a consolidation and maybe a retracement. No, that's exactly what it means. It's not one way, it is the way, right? So it's designed to get people to not buy bonds. Right? I mean, that's it. It's designed to get people to not buy bonds. So what would you do with your money? Well, you can leave it in cash. That's not that good. Or you can invest it. And that goes into the real economy, right? Yeah. All right, so anyways, you can see what we have here. As I was saying, down, this is late on Friday. Okay, we were here. Down to the 21, up into resistance, and then maybe a lower low, or at least a double top, down into a 55. Okay, this is sort of the idea. You can see that I drew, Friday morning? So here it is Monday morning. Friday morning, I drew this, even though it went straight up, straight up, straight up. Look how fast it went up. I'm like, yeah, that's cool. So now it's going to come down, and then it's going to head up, and then it's going to come down. So that's pretty cool. So we were here. I'm not even sure if we hit this yet. But anyway, so now we're in that channel. Okay. Are we on a free and clear plan? Is this trending yet? Well, on this time frame in here we are, but on this other time frame we're not really, but we are just simply at the top of the channel, right? So if we're going to get a breakout, right, it needs to come up to, let's say, this level and then rally up. And if it ain't going to do that, then this is resistance and maybe it'll work its way back down. Where? Well, just simply the next level of support. You see that? In which maybe someone would buy it back again. So it's quite overbought. Doesn't mean it can't go up. Okay. You notice that I have it coming down in the short run, and we have a sell pivot in there as well, so that it all makes sense. It doesn't have to come down, but it certainly can. Wake up! You got to make the money. Try to get my drawing tool going here. There she be. There she be. There we go. Okay. Is that beauty? So you can see if you want to bring it down, you certainly can. What I tried to draw last Friday, and I guess it doesn't look like it's as clear to me now. I mean, I drew it, but it doesn't look clear here. I must have drawn it a couple ways, but we need to come down to this 55, then up for a double top, and then down to here, okay? And if bulls want to buy it, that's a better place to buy. East Africa in the house. Whoop, whoop. You see that? Down to the 55, up to the double top, down into support, and then back up. So this is where bears want to sell. This is where bulls want to buy. Well, a 55 would. I don't know about a 50, but a 55 would. Okay. So what if you want to go that far out, then what that says is I just said double top and then drop. Well, that would then set up a double top here and then a drop. So that means now we have up, down, and we're here now. Then it needs to come down and then up, and then down, and then up, and then down. So you get a double top here, double top here, and double top here. It's just fractal geometry. No, that's okay, Yard. I'm just messing with you. It doesn't matter if it's 50, 55. If you traded with the 52.5 EMA, you'd do just as well. So anyways, lesson learned, maybe a double top of a double top of a double top. Okay. Wish I could turn back time to the good old days with the mama sang us to sleep. So I have this one coming down, up and down. We'll see. So it came down to, where would that have been? This might have been a shorter time frame. Not sure where that was. That doesn't look like I did it there. That doesn't look right. Not sure what I'm doing here. It looks like I have it coming down to the 21, but under a 21, I would expect it to go higher than here. All right, well, still double top. So if the euro yen's coming down, they should all come down, and if they don't, you should be worried about it. But what this seems to me to be doing is more like this. I don't know why I drew it this way. Brain fart, maybe. Top, top, drop, top, right? That kind of thing. I guess it looked slightly different on Friday. Who knows, right? Hey, and it's a holiday week, right? Are the markets closed on Friday? I think so, right? Yeah, is that right? Yeah, okay. Never good with holidays. I never plan for them. Okay. Easter. Yeah. Japan, was it Golden Week? Flag Week? Something like that? They have Good Friday on Friday? Yeah. Yeah, it's one of those things like America has a separation of church and state, and yet there are statutory holidays that occur because of Christian holidays. You're like, wait, the government shuts down for Christian holidays, and it's anyways, not complaining. All right. Mama sang us to sleep, now we're stressed out. Okay, check it out. Check this one out. Check. Yes, 2 weeks Golden Week. Yeah, yeah. There's lots of little things. It's fine. Hey, good morning. Yeah, even thinking about it, like, what's the point in putting "In God We Trust" on the currency? Like, what is the actual point? They had to think about it, like, what needs to go on here? Oh, we have to have a denomination. We should probably put a face on from one of the presidents. We should have a fancy design. And what else? Well, how about a little circle crest and it says "In God We Trust"? So if you don't trust the central bank, well, you trust God, don't you? So you can trust God that we're not going to default. Right? Is that like, what's the point of it? So anyways, we're here, and I'm just looking at all of this. Okay. Wayne, I know you completely disagree with this trade, but I have a buy stop order on MM32. It's fine. Right? Brooke disagrees. That's cool. I'm totally fine with that. I might more disagree with maybe how you enter. So I look at this and I just simply say it's resistance. I'm not saying up or down. Okay. Okay. Now, if I were a bull, I would rather buy down here and head up. That's all I'm saying. That's what I would rather do. If it goes up hardcore, I still can't buy it at what I perceive as resistance. Now, if it wasn't resistance and we'd be in an uptrend like this, and I'd have no problem. So it's just, right? So I don't disagree with you, Rook. I just have to adapt to current market conditions. And after a bajillion years of me doing this, right or wrong, I don't know, but I've developed sort of a survival mechanism where I'm like, I can only do what the market conditions allow me to do, regardless of what my opinion is, right? So even if I wanted to buy this, and I love global macroeconomics going up, I think oil could go to 80 if they wanted it to. All this kind of stuff, like I have no problem with this going up, okay? But, right, I can only catch a dip at support, right? So I wouldn't trade a breakout. I'd buy a pullback. Okay. What if you don't expect it to pull back? Well, then I don't buy. That's it. This might have been enough of a pullback, but I have rules of engagement. If it doesn't pull back, then I don't give it down. I can only buy at support. What can I say? That's all I do. If I'm a bull, I'm going to look at it this way. Okay. So my rules of engagement say if it pulls back, right? let me try to get this a little bit better. If it retraces back into a roll reversal, right, I will then be at support. I will be at a weekly pivot, I'll be at a roll reversal, and I will have a discount. And then I will buy it. If it doesn't do it and I'm only right on strategy, but I have no tactical entry, then it goes without me and I don't trade it. Okay? And the reason for that is you might feel like I'm going to miss out. Well, I never have fear of missing out. I have a fear of losing money, right? So that whole missing out thing doesn't bother me. Okay. If I buy retracement. So if it breaks out and pulls back, I'm going to buy it here. So I'm either buying it here, I'm buying it here. And if instead it just goes like this, well, that's so unusual that I don't know what's going on. If that happened, I'm like, oh my God, I don't know what's going on, but I'm not going to buy something that's overpriced when I don't know what's going on, right? So whatever. So here's what it is, Brooke, right? I will buy it here or I will buy it here if I'm a bull, or I don't. Or I don't buy it at all. Okay? And that's that. You take this over, like you look at this. Let's say you look at this, this type of setup here. Well, statistically speaking, if you take 30 samples of this type of setup, like in this exact kind of setup where I want to buy it, it might not dip, it might be turning bullish, and I am a bull, so I need to buy a dip, either here or here, but it just might take off without me and never come back, leaving me with no trade, okay? If you looked at it 30 times, that's a big enough sample size that you'd get almost the same result if you saw it 300 times on a percentage basis, right? Okay. So yeah, if you think it's going straight up, that's fine. I wouldn't be in it. If I was so smart, I would have been in it here. Like if your birdie's telling you now, your birdie sucks and you should squash it with your bare hand. You know, break its neck. Okay? Because it's not doing you any favors. So if you looked at this exact setup at 30 times or more, you will find that a very high percentage, in my humble opinion, through my years of experience, and of course I might be wrong, but this is what I tell myself at least, there will be a very significantly high percentage of times that it comes back and I buy it. Okay, so I'll guess. Let's say 79.6% of the time, I will get an opportunity to buy it here or here. Okay. Okay, and that's it. And what I don't know is, let's say this 20.4% of the time it doesn't come back. Maybe it goes up like this, but then it may also come back here. And, you know, I don't really care what happens at 80% of the time, or the 20% of the time. I only care about 80% of the time. I will buy at the price I want to buy it at. And the other 20% of the time, I really don't even care. Right? Right on, Robin. Robin and Steelin. Oh, Azabu, yeah, I opened up the windows. It's a crisp, cool morning. So I just thought I'd open the windows. The geese get loud, though, but if it's distracting, just let me know. So anyways, there's sort of a oversight on rules of engagement. On the long run, I simply must maintain discipline, buy I'll either buy a dip or I won't buy a dip. The other 20% of the time, I really don't care, because I think somewhere in that 20% of me not buying is it skyrocketing and I'm missing out. But I think more often than not, it doesn't do that, or potentially wouldn't do that, or I face the risk of it collapsing. And I'd rather miss out on a good trade than take a trade that very likely will end up with a loss. So I just don't do it. Okay. Okay. So whatever. Just got to stick with it. Okay. If the market doesn't give me what I need, then I'm not going to enter the market. I must maintain control. All right, so this is a perfect little sell if you're a bear. Okay, perfect little sell. Boom, 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 boom. And then we're going to look at exit, exit. So exit either here or here. What does this tell us? This one tells us here. So this one says we can get to this. All right. Now, what if you're a bull? If you're a bull, you want to buy in here. So, okay, and exit here. Easy peasy lemon squeezy. Which one is it going to be? Are we going to be down here or are we going to be up here? Well, how the heck would I know? So this is where your own research and bias is going to be important. Like always, you need to do your fundamental analysis, or even longer term technical. So maybe that you go to the 1 day instead of the 1 hour. But you do research, you do some analysis, you do homework over the weekend. Remember, on Friday, I begged you guys to do your homework, and I explained why. So if your coach and mentor is begging you to do the homework and you don't do it, you're out on the ice floes. No one cares about you anymore. If you don't do the work, you don't deserve it. You're just out there, right? But if you've done your homework, you know if you want this to go up or down already, regardless of anything else. So if you're a bear on this, this is an obvious sell. You probably should have sold it last night. We don't know if it's going to work out, but if you sold it last night, you'd be profitable by now. Okay? And then what you're planning on is some sort of variation of a trade down into here following. It's not really that good because, like, we're looking at an M3 to M1, right? But it's not really trending either. So I almost consider this like, this might be good enough. And I marked that on the first stroke. But anyways, if you're a bear, that's cool, right? You already got a trade. You're already profitable. Yeah, probably bounce up. You find yourself probably at break even. And if you stay bearish, it may come back down again. Great. But if you're a bull now, all this drop does is allow you to buy it. Okay? And this is your first buy. And as a bull, you say to yourself, up, down, up. That's the plan, Stan. Libya's oil production is under threat from fighting. Yeah, but that we knew that on Thursday of last week. Okay. Did you guys read the OPEC report? Maybe, let me go from memory here. 10 days ago? Did you guys read the OPEC report? If you go back in time now, I'm trying to guess. I can't remember if it was 6 months ago or 9 months ago. But OPEC announced a deal. I think maybe 6 months ago. They announced a deal that OPEC plus Russia would cut production. And one of the things I talked about in great detail at the time was that in the future, oil would move, but not until we were able to verify that the cuts were actually being made and that there was no cheating, right? And there was one other thing. I mentioned there was two things. I can't remember what the other thing was. But a big part of the conversation was the verification. How many people remember that? Right after the OPEC announcement, that we needed to wait like 3 or 4 months to verify the cuts were actually being done. I can't think of the word I used. Not confirmation. I'll have to go back. Does anyone remember it? No, I didn't say verification, confirmation. It's right there. I almost have the exact words. But anyways, the point was we needed 3 or 4 months to look at output and verify it. Oh, compliance. Was it compliance? We're close. It's something like that, right? But anyways, we needed this amount of time, right, to make sure there's compliance, that they're actually doing what they said they do. And then we look at where oil is now, and you can ask yourself, is that how professional traders are trading? And do you think we'll do Brent. Do you think these traders and investors get that type of information? Let's get rid of this. Yeah, I'll just new template. Cool. All right. Do you think traders of energy? Hang on now. Wait for it. All right. Do you think traders of energy? Let me go to the 4 hour. Do you think they gather that type of information? Do you think it's part of their job to watch monthly production numbers? Was it compliance? Thank you, Roger. Thank you, guys. Yeah, and I talked about game theory in regards to cartels, and we went into it multiple times in great detail. But do you believe professional energy traders look at monthly production figures? Yes or no? For sure. Do you think along that way they started to see that there was compliance amongst the members? And then lastly, third question, right? So if you were to write a paper, you'd have to lay it out, right? That you had to find compliance first, and then traders had to read the compliance. In this sense, in January, what were the production numbers? In February, what were the production numbers? March, what were the production numbers? And as we got more and more of these, because remember, this goes all the way 6 months ago, so we were like, what did OPEC produce in October, November, December, January, February? At some point, you're going to be able to look at this data and find out the trend of each individual country. I don't know if you've actually downloaded and read the OPEC reports, but they actually show you how many millions of barrels that Libya is producing per day. I think it's like 700,000 barrels a day. And then it shows the compliant target. Okay? It'll say Libya is supposed to produce this much. Right? Angola is supposed to produce that much. Venezuela gets a hall pass. Iran gets a hall pass. Iraq is supposed to produce this much. Saudi Arabia is supposed to produce this much. All so on and so forth, right? Well, yeah, the goats, it was grazing in the fields. Actually, that's the law of reciprocity. So that does fit within the game theory of cartel. But it also shows that it benefits each individual member of the cartel to cheat. So the question was, do they cheat, right? So long story short, guys, if you were doing your analysis and trading oil the way I taught you 6 or 7 months ago, then as this data came out, you would see month by month that there was compliance. And in fact, if you look at the most recent OPEC data, they complied almost exactly. There was 1 or 2 slight cheaters, but Saudi Arabia more than made up for it, but it wasn't even cheating. I guess it's probably difficult to get it exact. But by and large, people produced exactly the amount that they were supposed to. So if you were a professional oil trader, this would be fundamental information. You're getting the information monthly. And you're like, oh yeah, this is going to raise oil prices, right? And of course, that's why you made money. So you could go there right now. And so about 10 days ago, probably in this period here, about 10 days ago, I'm going off the top of my head, those numbers were released. And I looked at them, each individual country, their production target, and what they actually are producing. It's like straight up, straightforward analysis, and everyone is doing what they're supposed to do. Essentially, nobody's cheating. They are complying. And we talked about it way back here, even back here, I think. Once we know this data, I think it was here, so I think it was more like November that the deal was cut. We knew here all we needed was a few months to verify the compliance. And if there was compliance, then oil prices would go up, because that's the whole point of cutting. So we talked about it here. We don't know anything here because there's no data yet. And then the data started coming in. Compliance, 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 compliance. Okay? And it's gone from $50 to $80 essentially. Was it December 4th? So it was right at the end of this, right? So the thing was, how about this? Let's summarize it like this in a really interesting learning experience. So if it was December 4th, I think there was an earlier conversation, but December 4th is in here. So if we were talking about it in here, and a big cut is announced, do you simply buy because the news came out? No. No, you don't. Look what would have happened to you if you simply bought the news. What we were talking about is we need some time to verify. Verify compliance. And if we do, then there will be a buying opportunity, right? Isn't that sweet? And at some point, if you just took the advice and focused, if all you did was trade energy, remember I created this whole energy complex because 1 or 2 people said that's what they want to do, just focus on oil. Mike, that is an excellent thing to do. Yeah, that makes sense, right, Roger? But you need the verification. You need the verification. And then that's all strategy, right, Roger? So then we need to then use technical analysis to buy in, right? So we had to look at where the pivots were. You had to like look at this, like even the most basic analysis, right? The moving average stuff that I've taught since the beginning of time. That's the market change, right? Right? It crossed up here. It kissed but didn't cross, kissed but didn't cross, kissed, didn't cross. We're still here, guys. It's still the same entry. From January to today, April 15, from Jan to April and a half, We had 158 cross up. This is where the market technically is bullish on the 4-hour. That's pretty cool, right? Cool. Is that right? Yeah, sorry, guys. Are the birds distracting? I just wanted fresh air. My office gets warm and stuffy, and I just wanted the windows open this morning, that's all. But if it's distracting, I can shut it. I mean, it's sunrise, too, right? It's sunrise. I'm wearing cufflinks for you today, guys. Looking snazzy. Getting up before the sunrise. Doing our work. Got to do our work. You don't hear birds? Okay. Yeah. Cool. Let me ask you something. Has anyone been inspired maybe now to do things like maybe focus on oil or Brent or nat gas? Have you been inspired to read OPEC reports and IEA and EIA reports? Brooke, I watched the last 4 holes. I picked it up on the 16th, I think. But anyways, yeah, a few people. Is that right, Emilio? Gee whiz. I'll have to bitch and complain to someone. I'll look at it later. Thank you. Frack in the garden. Yeah, but like lots of people like love oil and gas and all that kind of stuff. Well, yeah, that's not. I'm hoping that people change their behavior. Like that's not a lot of hard work, I'd say. If you were to specialize in the energy complex, and you had to like compete in the market like large institutional investors and hedge funds. Looking at monthly production data, I think would be considered pretty elementary or elementary. And almost like the extreme bare minimum, right? That you would, without a doubt, do that level of work. And someone else compiles the data for you. You just have to look at it once a month. And yet, what percentage of people that have WTI on their MT4 account and trade it do not do that simple elementary level of research? What, 95, do you think? Yeah, well, I take it a little farther, right, where I take a whole class on the entire oil market. Probably one of the most fun. It was very, very challenging class, but I'm really, really glad it's like probably one of my best experiences at Harvard. Maybe not the best experience, but pretty close. It was such a Harvard thing to do, and it was so much work. It was stupid. It was so difficult. And to get an A out of it is something I'm very, very proud of. But I loved the knowledge, and you know. But anyways, this is a very, very basic level of fundamental analysis that I think can like simply make you money to know production levels, right? So what I was saying is I hope I've inspired that someone crosses over from the 95% of people that have WTI on their MT4 account and just trade it blindly like it's any other currency pair. I hope I get you to move over to the 5% that trade it like an institutional player and is buying, buying this asset class because you're seeing compliance in the production cuts, and less supply equals higher price. And you're just like making money. That's what I'm trying to say. Okay, that's what I'm trying to say. Cool. All right, changing behavior. Cool. So on the short term, we had oil coming down, didn't we? I think we were at one of these junctions. Clear. One of these junctions, might have been this one, the earlier one. We talked about starting with a hypothesis, right? Remember this one? Starting with a hypothesis and then taking the strategy here, the hypothesis, oil comes down was the hypothesis. Then you correlate that, which is a form of fundamental analysis, and then you say like CAD down. Remember? And we looked at like 5 different CAD pairs. CAD coming down, CAD, yen, Euro CAD, pound CAD. I think we looked at a whole bunch, right? So we'll see if, right, it hasn't made, right, the hypothesis started, it was correct for a while, and now it's restarted. So you have to look at it and continue. But it gives you direction, right? So if, at least, I guess at the very least, isn't it nice to know that when we were here, we said to ourselves, this is where it stops. It won't go up anymore. Isn't that cool? That's where the strategy came from, right? And now you'll know why I have these rules of engagement. Do you guys remember me talking about, like, if it goes up, I don't even care? Right? You guys remember that conversation? Like, it might go up. It probably, it could go up. It probably even will go up. I don't even really care. Maybe we get an Arctic turtle situation, but it's supposed to come back down. This is supposed to be the high for April, right? Therefore, there's a potential for a drop, right? That's strategy on here. So how do we make money, right? How do we make money from this strategy? And that's where you look at the CAD. And so we started creating CAD plans. Okay. And you notice they haven't really gotten going yet, but you could still be trading with the hypotheses here. So now what we need for this is down and up. Is anyone thinking of that? Does anyone have this as a trade plan? Well, check this out, guys. You can call that a triple bottom, okay, on a monthly M2, on a weekly central pivot. Is that a legitimate entry? if you had already told yourself based on oil, CAD is more likely to weaken than strengthen. Okay? Yeah. We don't know anything about pound, right? This could be a pig, and this might be the wrong currency pair, but you started, remember, you started with the hypothesis that CAD sucks. We don't know if it sucks. We don't know. Maybe it strengthens and pound CAD drops like a ton of bricks. It could happen. It might happen. But we started with a hypothesis. If oil has made the highest price of April, which we already predicted 2 weeks ago, so now here we are in the middle of April, we've hit the high target and triple topped. We could argue that that probably could be the top for April's oil prices. Doesn't mean it has to come down. We're just saying, well, shouldn't go up any higher. So if it does come down, it doesn't have to, it could just move sideways, but if it does come down, CAD will weaken, and if CAD weakens, this pair will go up. And right now, do we have the technical analysis to set up a trade? Well, we have a triple bottom on the exact pivot we need, right? And so, yeah, maybe it heads up. It could happen. Are you ready? Okay. Are you ready with a trade plan? And by the way, did you plan this on Sunday? I mean, I'm really hoping you guys are doing your job. Look at this that's the Sunday open. Okay. I really sincerely hope that you're doing your work over the weekend. I can't imagine why you wouldn't. Anyways. Okay. So how about this one? If CAD weakens, this comes down, right? Well, in that case, this is the right price. Okay? Somewhere in here. Okay? So we don't know if it's coming down, but you see this here? Okay? So we got some sort of plausible price action resistance. We have MM3, which is the perfect monthly sell. We have WM3, which is a perfect weekly sell. Now, is it falling? The moving averages don't say so. So what if, though, over the next 24 hours, we see something like this? I'm not saying to do this. I'm not saying sell this giant green candle. I've never once said that in my entire life. But what if over the course of the near term, the next day or two, you see a significant drop and maybe a double top form? Okay. Okay. Could happen. Remember, we're not predicting it's actually happening. What we're saying is, based on a hypothesis, if this does turn bearish here, it's believable. So you don't want to sell here. You want to look for reversal patterns here. Okay? Brooke says both bullish on both CAD and Swissy. That's a bit confusing, but because if you're bullish on CAD, you're bullish on global macroeconomics. If you're bullish on Swissy, you're bearish on global macroeconomics because Swissy is a funding currency, bro, right? So I don't think I'd ever do that. So if you're bullish on CAD, then by default, you're bearish on Swissy. because Swissy is going to fund all your CAD business. See, Swissy funds projects. It's a funding currency. Okay? So you can't be bullish on both. So you got to pick one, is all I'm saying. Yeah, well, that's why you're expecting a choppy upside. But see, I would cancel that out, Brooke. I'd filter that out. In some sense, let's say fundamentally, yeah, it's just not good. Yeah, I'd rather you say it this way, or not even say it. I want you to think of it this way, Brooke. Maybe you're right, but it doesn't really make a lot of sense, like the way that business works, the way that the world works. So maybe you're making decisions here, and you're looking at other currencies. You're looking at CAD versus everything and Swissy versus everything, and the way that you've done your technical analysis, you've come out where you're bullish on both. Okay, that's fine. But I'd rather you look at this about like from sort of a global business point of view. Even if you're right technically, it makes no sense. It's not even fundamental. I can't think of the right word. It just doesn't make any sense. So I would want you to be able to, first of all, know what I'm talking about. And I know I'm doing a terrible job explaining it. But I'd rather you say, in that scenario, risk is increased. Your risk is increased. That's all. So you have, let's say on the short run, all right, on the short run, maybe you're right. But on the long run, you're not likely to be right. And somewhere you don't know where you are. And that's the level of risk, right? The level of risk is increased because you may not know, or let's say it would be impossible to know. Because then it takes away, like, maybe you're dysfunctional and you don't know. No. Let's say it's impossible for you to know where you are. Are you in the short run, the long run, or somewhere in between? So when you come to that conclusion, I'd rather you think increased risk. Okay? Just like, so do what you need to do, because I also don't want people to think I'm only suggesting CAD will come down. Okay? That's not what I'm suggesting. What is the actual topic of our conversation? That oil's coming down, that CAD's coming down, or that you should correlate? What's the actual subject of the discussion? Planning. A plan starts with a hypothesis, right? And then scientific methodology, hypothesis, and then I guess study, right? So it's not even correlation. You should know correlation. You just should. So it all comes down, you need to start with a hypothesis. I don't want you to buy something because you see a big green candle. I want you to be able to explain what you're doing. And you should actually practice like you're sitting down with a client and you say to the client, over the next year, I am going to be a buyer of oil on your behalf. And let me give you 3 reasons why I think we should buy oil. First of all, oil has come down significantly over the last 2 years, and there are real reasons for it. Okay? However, those reasons have come to an end. 2, OPEC has announced that they are doing a cut along with Russia to stabilize markets, to decrease supply, and ultimately over the next 12 months significantly increase the price of oil. And 3, we are going to use EIA, IEA, and OPEC studies to verify compliance of these cuts. And if we do see compliance, based on supply and demand, oil is likely to either go up, is likely to go up and potentially significantly. Okay, those are the three reasons and blah, 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 blah. And so now you're going to study both fundamentally and technically, let's say, opportunities to be a buyer of dips, right? But you should be able to explain what you're doing. Now, the example I just gave was what we just talked about, oil, and that was, of course, over a year. Does your hypotheses have to be over a year? No, your hypotheses can be for the day, it could be for the week, it could be for the month, it could be for the quarter. Okay, let's say. So I do plan for quarters. I know what I'm doing in the fourth quarter and the third quarter. I already know. I already know. So, but your plan, your trade plan should be daily, weekly, or monthly on almost every scenario. So all I'm showing you, I don't know if I'm right or wrong, and I never know if I'm right or wrong. What I'm showing you is you start with the hypotheses and you say oil, a triple top at R2, monthly R2. Therefore, that could be a top. It could be. It might be the top. That's the hypothesis. So if it is the top, how do we make money? Well, that's the whole plan, right? But if it's not the top, guess what happens to CAD? Okay? You see what I mean? I'm only teaching you how to come up with a plan and then follow through with proper execution. So your plan can be completely opposite. You're like, Wayne, because of blah, 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 oil will go higher than R2. And I say, okay, great. That's a hypothesis. Now, I might say, well, that's very unlikely, but then you could probably counterfact that and say, well, if you look at how tight the pivots were before, this is probably a breakout month and blah, 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 blah. Great. As long as you know what the hell you're doing, your point of view is as good as my point of view. As long as you back up your trades with your point of view, if you do that, I love you for it. I don't care if I vehemently disagree with you. You're trading properly, and I love everything that you do. Okay? So like CAD Swissy 2 weeks ago, we had a hypothesis. Do you remember the hypothesis? Buy here. Well, yeah, buy there. Why? Oil was going up. This is a monthly M2. And oil was likely to go up. Why? We had an M2 to M4 monthly plan on oil. Great. If oil goes up, this is going to go up. Oh, look, it's an M2. Great. Buy it. Look, buy the dip. Great. Okay. Problem is, eventually, prices get over too high. But you can certainly still be a bull here if you wanted to be. But just bear in mind, oil might top out and this might be cut early. And bears might have their chance to sell at their M3. You've run out of steam, or in this case, energy, right? Maybe, right? So all I want you to do, my whole entire message, is have an opinion and trade it. Something you can describe to a newbie. Why are you buying CAD yen? Shouldn't be a difficult thing to explain. And you should know if you're doing this the rest of the month or not, right? So anyways, here's some very basic information. Okay. Okay. That's what you need here. Okay. That's a strategy. Okay. How do you enter this tactically now? How do you use tactics? If that's the strategy, up. Then what's the strategy? buy at M2, right? Buy it at M2, buy it at M2. Maybe I'll buy it at M2. What do you think? Right? That's what I've taught you, right? If you're a bull, buy it here. If you're a bull, buy it here. If you're a bull, buy it here. Cool, right? Have I taught you wait for it to get to R1 and buy it? Has anyone been taught that? Wait for it to become up here and then buy it? No. This was maybe a buy. We didn't even get that. So what? Okay. And then lastly, in this situation, what might happen? Well, we call this out of position. OOP, yeah, you know me. So if you're in my swing trading group, you already know how to trade this. But in the back of your mind, you should think of, if it's that ridiculously bullish, right? People are going to take profit here, and we're going to come back and check it out. Bulls will probably ride it up, hit their profit, right? Wait for it to come down, and then buy it back. Okay. Yeah, well, it's a specific type of dip. Yeah. All right, cool. So good morning, everybody. Good morning. I mean it. I wish you a very good morning. Looks really exciting, huh? Yeah. Hey, well, just do your job. Wait for it. Trade what you got. Kind sir. Indubitably. All right, let's go back to this. Thank you, guys. M4, Cedric. Come on, Cedric. Gee whiz. Yeah. Cedric, you need to take the swing trading course like ASAP. Well, actually, on the oil bid with Japan, they actually buy nat gas and not oil. Right on, Raymond. Yeah, Raymond, me too. Oh my God, I'm at that point where some days I'm really sick of grad school. It takes so much of my time. I've been working 8 hours on 3 math questions. I'm just sick of it. Who has time to do this shit? Oh my God. I still don't know what the hell I'm doing. Oh my God. So, I don't know. I suppose that's why they do a ring ceremony. So, at the end of your 3rd year, right as you kind of it's really on the last day of your 3rd year, it's really the first day of your last year, right? Your senior year. you get a ring. And, Harvard's really smart about this because, the whole idea is to keep you in the university so you pay, right? You don't drop out. You keep paying, right? You keep paying your tuition. So they're really smart where they bring the parents back and they're like, look at how mature your young son or daughter has become, and look how wonderful Harvard is, and you're only 1 year away from graduating. Like, you don't want to quit now, right? So anyways, they put a gold ring on your finger, and you're supposed to wear it facing you to give you the strength and courage to get through your senior year. And then when you graduate, you take it off and you switch it. So anyways, I got my gold ring is being made. It's just so funny because I'm right at that point where, like, oh my God, this semester started so easy, and now it's like pulling your own teeth out. Oh my God, got to get through this. And then there's summer, and then there's spring, and then there's fall, and then I even have next summer to do a little thing I have to do. It's ridiculously overwhelming, the amount of work. I'm worn thin. Holy schnicker-schnacker. Is that right, Peter? Yeah. Yeah. It's so exhausting. Two case studies, 3 spreadsheets, and 1 team project. Yeah. I wrote a paper this weekend on the life cycle of market structures. It's funny the things that schools make you do. You're like, yeah, I wouldn't have done that, nor did I really have a burning need to do that, but I crunched through it. Just bang it out. All right, so gold, oil. I guess we didn't do gold this time, right? We're just kind of sitting on it. I mean, I kind of go back to what I've said in the past, right? I'm just kind of waiting, I suppose. Okay, I wouldn't sell it here. The place you could have sold it was here. It was the place you were supposed to sell it. I believe Brooke called an Arctic turtle on it. But anyways, now what do you do? Not sell? And if you want to be a bull, you could start looking for it. This is the right price. Okay. Do you have a proper entry at the moment? No, you don't have a proper entry. Yeah, Brooke did. Yeah. See? So it's like, if you're doing your job, this stuff is not terribly difficult. If you already know you're a bull or a bear. And remember, if you were a bull and it's up here, well, what you know for sure is don't buy it, don't buy it, don't buy it. And you're thinking, well, maybe I'll buy it here. Well, you didn't get a reversal pattern, right? Right? So you kind of need it to go up now. And on a weekly basis, it's not even a good price. So I think what you'll probably end up seeing is we get kind of this, and maybe next week start moving up. So the things we know, let's do a bullet point. You can't sell it unless you're a fool. Okay. And is it a buy yet? No. Okay? Now, if it drops down here, oops, that's yellow. I didn't want that to be yellow. There we go. If it does this, then you can sell it later, but that's not in the cards right now. Okay? So you might sell it here. Once again, probably Friday or Monday. Well, I guess Friday's closed, right? No, actually, no, they did not, Batman. Harvard was not part of that, and they're very clear about it. Yeah, the problem, though, Yarn, on that is this isn't really a desirable weekly pivot. This is the desirable weekly pivot. So I don't know why someone would want to do that. There's always a reason. So like an Arctic turtle is, you're supposed to take profit here, but someone was targeting that. So it's going to stretch out, hit that, and then everyone on the planet. There's no one left after you hit that. Because some people will do their job and they'll get out in the pink zone, but not everybody. And some maybe scalpers are targeting this. But once you hit this, everybody on the planet is out, except for, of course, amateurs that have no idea what they're doing. But this is so this is describing an Arctic turtle where most people got out here, everyone else got out here, and there was no one in the market. Well, what does it look like when no one's in the market? Like no one's left. That's what happens. There was no bulls. There was no bulls left. The market collapsed. Okay? But like who's targeting weekly S1? Nobody cares about support 1. It's an irrelevant pivot. So I'm just saying you still can't sell here because you're at support. Only a fool sells at support. You want to be brave. You want to have discipline. You want to be the tough guy. You want to be aggressive. You might say, Wayne, I'm so aggressive here. No, that's just stupid. If you want to be aggressive here and sell there. That's being aggressive because it had been up for an entire week. And you were that brave and disciplined to wait for the M3, right? So anyways, I think what could happen is we head all the way down here early. Doesn't matter. If you're a bear in here, you're still a fool. You should have been here. And you're like, but Wayne, it's falling. What does that have to do with anything? Okay? So how do you do it right? Well, in this case, if it does this, I already drew the plan, but let me draw it again. You'll probably sell here Friday or Monday. Okay. Once again, my rules of engagement are conservative and they require discipline. Even if it's falling here, you don't sell it. If you wanted to be brave, you should have been brave here. Okay? And the discipline is to let it go because it does not follow your rules of engagement. And then we'll see what happens here at the end of the week in that case. Right? And maybe this becomes a role reversal. Okay? All right, I've spoken too long. So anyways, I will see you guys tomorrow. Thank you for being on my team. Thank you for your loyalty and treating everyone in our community with respect. If you're benefiting from these webinars, please visit tradersway.com. Show your thankfulness, let's say. Show your gratitude by opening up an account. When you're in your back office, download MT4 and then come back to this video and you can download my chart templates. Okay? install them, and your charts will look like mine. I will do the webinar this week, tomorrow, and on Wednesday, and on Thursday, but not Friday, because Friday the markets are closed. There are 4,000 videos associated with my work on YouTube. You're invited to watch all of them. They're somewhere between 20 minutes and 3 hours each. Good luck to you. Peace on earth. May the pips be with you. May your profits be above average. See you tomorrow. Thank you, Traders Way.